morning, ladies and gentlemen, boys and girls. Keeping today short, being Wednesday, Valentine's Day. Really quick. On schedule today, absolutely nothing. Nothing. At 8 o'clock in the morning, SEC Chair Gensler is going to be speaking on CNBC. I would bet money that that's going to be discussing Bitcoin, nothing else. At 9:30 in the morning, we got Fed's Goldsby. God damn. Can you imagine how much fun they made of that person, boy or girl, when they were in school? Or at least if they were in school during my times. And at 4 o'clock, after the closing bell, it's Fed's bar. There's nothing on schedule for today. Nothing. So we're going to go over where we came from, where we're going, and that I will not be here on Friday. Yesterday, quickly, SPX, 53.90 point gap down. Only a 51 point range, and the close, under the close from the prior day, minus 68.67. Almost a perfect Valentine's gift had it been minus 69. Reverse 69, you got to try it one day. We closed down 14.77. Now, as I mentioned over in the room, you do have a 50-50 once in a while on these greater than 20 point gap downs where you will close above the open. But like I said in the beginning of the morning, in the very beginning of the morning, in the heat of the moment, you're an absolute psychopath to be buying calls. And again, what you got there off of that open, you had your little dip, exactly minus 2%, exactly minus 2% from the all-time highs placed just a day prior. We almost came back into the gap. Actually, I apologize. We did come back into the gap. I know there's 3 people out there in the room that are watching every move I make so that they can... So that gap right into it, and then that was where the end of it all was. You saw in your alert room where I said, put your stops on your calls, put your stops on your put credit spreads, and then you got the afternoon fall off from 11 o'clock. And right over here, right around 4 o'clock, bring you in here again. Yesterday in the email, where is it? Yesterday's email, like I said, highlighted, 0 DTE Addicts chat channel. I was asked by many addicts to create a separate channel in the Slack chat to only post anything about 0 DTE. So here you go. Many were concerned the mention of the 530 puts yesterday being on Monday in the main chat room was missed, despite how the main chat for close to 7 years had been what we had always mentioned 0 DTE in. So the channel is there for the addicts that want it, and anyone, I don't care who you are, if you're posting shit in there, you're gone. And I'm not talking about the channel. I mean, you're gone. You're out. Your membership is canceled because I'm tired of 300, 200 people, whatever is in each individual channel, getting notifications on their phone while they are at work about certain individuals posting absolute fucking garbage. And whether you're a lifetime member or you're not, my finger is on your button. So shut the fuck up and let it all come together. Because what happened there on Monday, those 50-30 puts went from $1.25 up to $13.60. They wound up closing at $7.45. You do your own math. I'm not here to do your math for you, like I posted in yesterday's email. I am not here to tell you, unzip now, aim here, fire, shake, zip back up. That's not what I'm here for. And what you had yesterday, the 0 DTE SPX 4945 calls, as everything eventually started to shut the fuck up in the 0 DTE addicts room, there were 4945 calls. We're at 65 cents, right at almost 3 o'clock. They dropped down to a nickel. So the 3 of you Take your opportunity. Where did they close? They ran up to $8. They closed at 6.30. Over on your IWM, we sent this out on Monday. I entered into the March 1 IWM 200 puts, $3.01. This is a 32 trade. This is the 12th official 32 trade. I told everybody in the morning, go check your IWM puts in the morning. Started here at 9:55. Once again, they drop down below, and the three people in the room that are going to make sure that I am wrong $8 they ran up to, $7.25 they closed to. These are for March 1. Today is February 14th. We've laid everything out on the IWM. So those of you that did take advantage of it, obviously you understand that I will not put a 32 trade alert out unless I am sure that the one or two people who are going to take that trade that have no food in their refrigerator and three children they need to feed are going to have an excellent chance of being able to obtain that 30% within the time frame of that contract expiration. That's the responsibility on my own shoulders that I take when I am going to put one of these trade alerts out. So, bringing you back in, 53.90 gap down over on the SPX. Now, for comparison purposes, the last time we had a gap even close to that amount was back on February 2nd, right after we had posted that 41.95.44, the day after the FOMC meeting, which was on January 31st. We had a 43-point gap down. We eventually wound up going down fractionally greater than 9% into the middle of March. We've talked about the seasonality multiple times. On the 2 days after the March bottom, we had another minus 43-point gap down. As you can see from technical indicators, which are grandpa, we were overbought when we had the first one. Money flow was overbought. We were oversold when we had the second one. Money flow was oversold. That March bottom is what led into the run into July, into that plus 20% rally, which we have already done now since the October 27th lows, into that SPX 4607 before we got the 10% drop. Now, for comparison purposes only, 54-point drop. The last time we had a drop as significant as that was on the October bottom, which was the bottom, October of 2022 bottom. We had a 56-point drop, and many of you were here that day, and remember, we completely crushed it getting into calls on that morning because of what you see right above here, knowing that we were getting a bottom coming in and having that big buy divergence. That was our opportunity, and that was the bottom of the bottoms. Prior to that, coming off of that August 2022 high, 43.25, we had already been dipping. We re-rallied into that beginning of September move, and then the big, nasty CPI day came out as we were overbought, and we gapped down 73 points. So, comparison purposes only, having posted the all-time highs just Monday, we did some damage. But like I've shown you there on your charts, we did not break what needed to be broken, which was that 49.18. We came down to it, we came down and touched it, and we came down to the 38.2 retracement to the middle of January lows, that 47.14, where a lot of people got caught off guard because everything was pointing to that direction. And then suddenly the QQQ took off. We did break below the 23.6 retracement going back to the January of 2024 lows. However, we have not made any significant damage. So yesterday was a dip. Come over onto SPY, and as you can see here on SPY overnight, we are already starting to make a move upward. ES futures are up 20 points, 0.4%. And Trevor, your question that you asked in the beginning of the morning of yesterday of a plus 1% move coming, the answer is yes. That has been the trend as we go over here onto the spread room. Like I said early in the morning, I do not trust the lower safe edge, 49.4228. We broke it, but we did close above it. Now, we posted a minus 1% day to stay on this subject here. Minus 1% yesterday, closed below minus 1%. Prior 1%, January 31. Prior minus 1% day, January 31, followed by 2 plus 1% days right after that. Prior minus 1% day being January 17th, followed by 2 plus 1% days the day after that. Going back to our last minus 1% day in 2023, followed by a plus 1% day the very next day. So the trend had been since, the last few, let's call it, plus 1% the very next day. Plus 1% today will be 5,270. The weekly candle, again, because we are going on a 6th consecutive green week, should we get a close above 50.2683, which I advised everybody yesterday that was in that weekly trade, which was $3 credit, take it off, go ahead. It's down to 50 cents. You've made better than 100% on the trade. Same thing like we had over on the 49.50, 49.55 puts. Early in the day, they closed at 49.53. That was why the trade was there, or the alert was there, to take the trade off. On to the QQQ. Again, same bit of caution. Caution. 8% drop. Or sorry, I apologize. You three, you got your laugh. An 8-point gap down. We came right down to 425.33. The last time we had gaps this significant on the QQQ were those same places, more or less. Big gap down in September, big gap down on the October of 2022 bottom, and a big gap down there in the beginning of February of 2023. Same places as the SPX, same technical setups as the SPX. The difference being the major one over here in September is we were already into a decline. So again, this is for comparison purposes only, but it is of significance due to the fact of how we have come down right to the edge and failed. 49.18 was what we were looking for to be excessively broken and closed below, and we did not get that. Over on QQQ, skip the VIX for now. No, I was right. QQQ was there. On the QQQ, we were looking for that 425 to be broken and closed excessively below. We only came down to touch it. Now onto the VIX, which is where the significance really fits in. Today is OPEX for the VIX. Today is OPEX, February 14th. We've just taken everything out. The big 1451. We started yesterday at the 1410. We rallied through that 1502, 1542, 1622, 1706, and came up to kiss 1811. Extremely significant, that 1811, and right here being this 1821, which is the 23.6 retracement from the highs going back into 2022. We've been here before. And when I say we've been here before, here we are right here back in the middle of January January 11th, going into that drop over here on January 17th. We've been here before where we've had big rallies up to significant placements and we've failed. We have not had this for a significant period of time because we have not had any drops since this rally began back in October of 27. So today is a very good day to be sitting there and saying, okay, prove me wrong. Prove me wrong that we are not going to get a plus 1% rally. Prove me wrong that we are not going to go and fill this gap back up to 501 on SPY. Prove me wrong that we are not going to get this gap filled back to 522, 5022. Again, 5022 over on the SPX. Prove me wrong that we are not going to fill the gap over here on QQQ 435. You have two choices. You could make sure that you are in the trade so that you can and we do go and fill that gap, or you can sit back and look at the damage that's been taken. And should this gap get even fractionally filled as we're looking for points of weakness, since we are now in the window of weakness, bringing you in here into, oh yeah, DJ Cumberland. I was watching that earlier. DJ Cumberland, Cummerbund, apologize. DJ Cummerbund. He's got some awesome mashups. So again, we are in that window here of February 9th into February 24th. We are in the window of weakness, and what we need to see here is capitulation. We need to see that significance get taken and taken down much stronger and much further. And when we widen this out, quite frankly, that 425 is only the litmus test. 416.55 on the QQQ. We get there, we break there, we know that we have just started. We know that then we can go back to the comparisons. I apologize. That we are here. We are right inside of that red circle, and we have March and April coming to us. We are here. We are into that. Where is it here? Not wrong one. Right one. We are here. We are into this early February circle on the SPX from February 2023, and we have March and April coming to us. But not until we get breaks down below yesterday's lows. And again, because the trend has been minus 1%, followed by a plus 1% day, two back-to-back plus 1% days. Plus 1% today is 5,270 over on the SPX. As of this moment, looking over on the futures, which I have the ability, I can drag over here, we are overbought. As of this moment, we are overbought. On the 1 hours, we are overbought. So, again, a lot to compare with. Absolutely nothing to go out there and take advantage of, but I would be very, very cautious of seeing that plus 1% move, considering there is nothing on the card today. Nothing economically. Nothing. And everybody has been brainwashed into buy the dip. So on Friday, I am here. And for those of you that don't know where that is, you can zoom out on your map. And that is where I am. Right there, that little blue speck. Right off the coast of Brunei. Right off the coast, just south of where I am over here in the Philippines. That's where I will be on Friday morning until Monday. So I will not be in the chat room on Thursday. I will be down there in Borneo, just like Triple X filmed. Yes, he did. The very ending of the movie of Triple X, where Vin Diesel is there and he gets the phone call. This is where I will be from Friday till Sunday. I will not have any internet because I will not be bringing any electronic devices. Because why would you want to bring an electronic device to a place like that? So enjoy yourselves. Get ready for another trading session today, and the most significant thing that we are going to be watching is going to be that VIX. So I'll see you guys in the chat room. Have a wonderful Valentine's Day.